Welcome to Key Points for August. This month we are going to talk about the ongoing economic recovery, rising COVID-19 infection rates around the globe, as well as the US corporate earnings season. The sharp economic recovery has continued in July as well, driven in many cases also by generous fiscal stimulus. For example, in the US, the Citi Economic Surprise Index, which measures the difference between expectations and actual outcomes, has recently reached the highest level on record, meaning that the recovery has been much sharper than expected by most analysts. For example, payrolls have soared, retail sales have risen substantially, and also the housing market has seen a substantial recovery. Nevertheless, the way until full recovery is still very long. For example, in the labor market, only roughly 1/3 of the more than 20 million jobs that have been destroyed during the pandemic have so far been recovered. COVID-19 cases keep rising at a substantial rate globally, not least in the US, which recently saw the highest new daily cases on record, reaching more than 78,000 new cases before leveling off. While mortality rates and hospitalizations have not risen in line with this high number of infections, local lockdown measures, as well as self-imposed restrictions, may still provide some headwind to the ongoing recovery. On the other hand, these rising risks will certainly also increase central banks' willingness to extend their generous monetary support, as well as potentially ignite new fiscal measures, as could be seen in the European Union, the UK, and potentially also in the US, where it is particularly important given that a number of substantial unemployment benefits ran out at the end of July. Now, the final point we want to talk about this month is US earnings. We're currently in the middle of the Q2 earnings season, which roughly 60% of the companies listed in the S&P 500 having reported so far, of which 85% have beaten estimates. This is well above the historical average. And also the amount by which they have beaten estimates is certainly well above historical average. Well, this still leaves profits roughly 1/3 lower than in the same quarter a year ago. But nevertheless, the positive surprise and the reasonable outlook has resulted in earnings estimates for the full year starting to rise again. Remember, the full monthly report, as well as our other publications, including topical thoughts, can be found on our website at zurich.com/msme.